This lecture will be short, but I hope it helps you dive in and open up your minds to the fractal nature of the markets. You should have watched the previous lecture about the midnight open before watching this one. If not, I would recommend you do. Monday, we start off consolidating, then take out the lows. The next candle opens and expands through the midnight open. Price uses the fair value gap as support, gives a small expansion, and then begins to consolidate again towards the close. Tuesday, we open and immediately take out the previous day's high. From there, price quickly displaces back into the range, forming an order block above the midnight open. Price then drops below the midnight open, engineers liquidity, returns back into that order block, forms a high, and displaces below the midnight open before starting to draw lower toward the engineered lows. Wednesday, we continue dropping, forming a low during the London session. New York retraces before distributing higher. The aggressive displacement from the midnight open signals that price is rushing to get somewhere. We take out Monday's low, form a new low, and begin expanding back up toward the midnight open. Thursday, price dips below the midnight open early, then expands above it. We get one last retracement below the midnight open before price begins spooling up toward Tuesday's high, completing the market maker model. There are plenty of opportunities throughout this week if you're reading the narrative correctly. Each day can be seen as a cycle, and you can determine the AMD this way. Let's say on the higher time frame, we're bullish. Once Monday's low was taken and a bearish fair value gap formed, we had two clear options. Price utilizes that fair value gap as resistance and continues lower, or price displaces above and utilizes it as support to push higher. By the end of the day, we closed above that bearish fair value gap, giving us confirmation for the bullish continuation. The next day, I have a bias. Coming into Thursday, we know Tuesday accumulated, Wednesday manipulated, so Thursday should distribute. We have narrative. The Tuesday high becomes our draw on liquidity. We want to position ourselves below the midnight open using the bearish fair value gap just below as our point of interest. From here, we can zoom in on price action and look for confirmation entries using the fair value gap and order block ranges to refine our execution on the lower time frame as price begins distributing toward that Tuesday high. On Thursday, we open and immediately drop into the inversion fair value gap. Since we are anticipating distribution, an open low formation is exactly what we want to see. As price displaces above the midnight open, that fair value gap becomes a key price delivery array to monitor. We drop back into the fair value gap below the midnight open, form a low, and then begin to expand higher. The draw on liquidity sits much higher. So if you missed the early entries and came to the charts later in the session, you can use the open of that session the same way you would use the midnight open, buy below, sell above, and asking yourself the same questions. Using fractalized opens works best when the higher time frame is in expansion, moving toward a clear draw on liquidity. This technique is especially powerful on distribution days, when we can anticipate limited retracements because the market has a specific price target it needs to reach by a specific time. As expansion continues, the consecutive fair value gaps should act as support. These sit just below the New York Open, making that area a point of interest to monitor for potential entry opportunities. During the New York afternoon session, price drops below the open, accumulates, and once it displaces above, we see a sharp expansion into the draw on liquidity. Time is running out, and the market is completing its move before the end of the day. As the next cycle opens, we can apply the same concept, mark the open, and look for opportunities to go long below the open. Now, you may have noticed that some of the cycles on the screenshot do not line up perfectly. That is because what I have shown you is an illusion and not the real chart. I've been explaining price action as we would look to review the week. The purpose of this lecture is to open your eyes to how you can use the open of specific cycles the same way you use the midnight open. On the next slide, I will show you the actual chart I have been analyzing. We have been analyzing the 5th November London session going into the AM1 New York session. I explained this price action to you, but had to change your lens to show you what you do on the higher time frame can be fractalized and repeated on the lower time frames. This is a way you can help build narrative on the lower time frames and know when you are aligned with the higher time frame. It helps build narrative on the lower time frames, and even whilst in a trade, this helps you manage your trades and pick your targets. You can utilize the fractal open for specific cycles to help find better positions as long as you have narrative from the higher time frame. Thank you for taking the time to watch. I hope this provides some clear insight. Hope you enjoyed the lecture.